Nvidia has dominated the artificial intelligence conversation for years now, and rightfully so. The company's chips power some of the most advanced AI systems in the world. But here's the thing that savvy investors are starting to realize. Putting all your AI eggs in one basket is never a smart strategy. If you're serious about building wealth through artificial intelligence exposure, you need to think beyond Nvidia. And if you're watching this channel for insights into tech investing, make sure you hit that subscribe button so you don't miss our deep dives into the stocks that could reshape your portfolio. The AI revolution is far from over. In fact, we're still in the early innings of this massive technological shift. Companies across different sectors are positioning themselves to capture enormous value as artificial intelligence becomes embedded in everything we do, from healthcare to finance to manufacturing to entertainment. The question isn't whether AI will continue to grow. It absolutely will. The real question is which companies outside of the obvious chip manufacturers are best positioned to capitalize on this trend. When we think about AI stocks, our minds typically jump straight to semiconductor names. We think about the companies making the hardware that powers these systems. But the truth is that hardware is only part of the equation. There are infrastructure companies, software platforms, data management firms, and enterprise solution providers that are equally critical to the AI ecosystem. These companies are building the backbone that allows artificial intelligence to function at scale. They're creating the tools that engineers use. They're managing the massive data flows that AI systems require, and they're often more profitable than the chip makers themselves. Let's talk about the first stock that deserves your attention in 2026. We're looking at a company that has positioned itself as the premier cloud computing platform for enterprise AI workloads. This company has massive data centers spread across the globe, and they've optimized their infrastructure specifically for artificial intelligence applications. What makes this company so compelling is that they're not just renting computing power. They're providing an entire ecosystem where companies can build, train, and deploy AI models. They're offering managed services. They're offering specialized hardware. They're offering software frameworks that make it easier for developers to work with AI. This is a company that's perfectly positioned to benefit from the enterprise AI boom that's just getting started. The revenue growth at this company has been extraordinary. Over the past few years, their AI and machine learning revenue has grown at rates that dwarf the overall cloud computing market. And here's what's really important. The margins on these services are exceptional. When you're providing specialized infrastructure and managed services for AI, you can command premium pricing. Companies will pay for this because it accelerates their time to market. It reduces their costs. It lets them focus on their business logic rather than wrestling with infrastructure complexity. Moving into 2025 and 2026, this company is expected to continue this acceleration. As more enterprises move their AI workloads to the cloud, as organizations realize that building their own data centers for AI is impractical, this company captures more and more of that spending. The addressable market for enterprise AI infrastructure is absolutely enormous. We're talking hundreds of billions of dollars over the next decade. And this company is one of the few with the scale and expertise to capture a significant portion of it. Now let's look at our second compelling AI stock. This one operates in a different but equally critical part of the ecosystem. We're talking about a company that specializes in data platforms and analytics. See, artificial intelligence runs on data. Massive amounts of data. Organizations need to collect that data. They need to store it. They need to organize it. They need to clean it. They need to make it accessible to their data scientists and AI engineers. This company has built the platform that does all of that at enterprise scale. What's remarkable about this company is their focus on making data accessible and usable. They've abstracted away a lot of the complexity that traditionally made data engineering so difficult. Their platform allows companies to build data pipelines quickly. It allows them to discover data assets across their entire organization. It lets them implement data governance and security at scale. All of this is increasingly essential as companies invest more heavily in AI. The thing about data platforms is that they tend to become sticky. Once an organization has built their data infrastructure on a particular platform, moving to a competitor is extremely difficult and expensive. This creates high customer retention. It creates opportunities for upselling additional services. It creates predictable recurring revenue. That's a business model that investors absolutely love, and it's especially powerful in the enterprise software space. This company's financial metrics are impressive. Revenue growth is strong. Gross margins are expanding. The company is moving toward profitability even as it invests in growth. And the market for their services is expanding rapidly. Every company that wants to be competitive with artificial intelligence needs a modern data platform. That's not an option anymore, it's a necessity. Our third recommendation is a company that operates in yet another critical layer of the AI stack. This is a company focused on cybersecurity and data protection. Now you might be wondering what cybersecurity has to do with AI stocks. The answer is everything. As companies deploy more AI systems, they're creating new security vulnerabilities. Those AI models contain valuable intellectual property. The data flowing through AI systems often includes sensitive customer information or proprietary business data. Protecting that data and those systems is absolutely critical. This company has positioned itself as a leader in AI-specific security. They're building tools that help organizations understand what their AI models are doing. They're creating security controls that prevent adversarial attacks on AI systems. They're helping companies implement responsible AI practices. They're addressing bias in AI systems. They're building compliance and audit capabilities. All of this is becoming increasingly important as regulatory scrutiny of artificial intelligence grows. What's particularly interesting about this company is that they're operating in a market that's growing faster than traditional cybersecurity. While security spending has historically been a necessary evil that companies try to minimize, AI security is increasingly seen as a competitive advantage and a business enabler. Companies view these investments differently. They're not just about risk mitigation. They're about enabling AI deployment. They're about building customer trust. They're about maintaining competitive advantage. The adoption rate at this company is accelerating. They're expanding their customer base rapidly. They're increasing spending per customer. Their net revenue retention is exceptional, which means existing customers are upgrading and expanding their usage year after year. This is the kind of business model that compounds into massive value over time. Like this video if you're finding these insights valuable, because understanding where to position your capital in the AI ecosystem is genuinely important for your long-term wealth. Finally, let's talk about our fourth recommendation. This company operates in the AI software and application space. They're building the tools that organizations use to implement AI in their specific business contexts. This could be tools for customer service automation, it could be tools for document processing, it could be tools for content generation or analysis. This company has built a platform that makes it relatively straightforward for organizations to deploy AI solutions for their particular business problems without requiring a PhD in machine learning. What's compelling about this company is their land and expand model. They often start with a specific use case or department within a customer organization. A customer implements an AI solution to automate customer support, for example. Then, as that solution proves its value, the customer finds additional use cases. They might apply the same technology to automate back-office processes. They might use it for fraud detection. They might use it for predictive analytics. One initial sale turns into 5 sales over time as the customer discovers more and more value. This company is also benefiting from what's called the democratization of AI. A few years ago, building and deploying AI required a team of specialized machine learning experts. Today, platforms like theirs are making it possible for organizations with more modest technical resources to implement AI solutions. This massively expands the addressable market. It means that not just the largest enterprises, but also mid-market companies and eventually smaller organizations can benefit from and invest in AI. That's a huge tailwind for this type of company. The financial performance has been strong across all 4 of these companies. But what's more important than any single quarter's results is the trajectory. These are companies that are growing revenue at significant rates. They're expanding margins. They're moving toward or achieving profitability. They're operating in markets that are structurally growing. They're addressing essential needs within the AI ecosystem, and they're competing from positions of strength with strong competitive moats. Of course, there are some risks to consider. The AI market is still developing. There's still uncertainty about which technologies and approaches will ultimately prevail. Regulatory changes could impact valuations. Competition is always a factor. If you're investing in these companies, you should understand the specific risks of each business and make sure they fit within your overall portfolio strategy and risk tolerance. But here's what's really important to understand. Artificial intelligence isn't a bubble that's going to pop. The capabilities are real. The value creation is real. The the structural tailwinds are real. We're in the early stages of a technology adoption curve that will likely play out over the next decade and beyond. Companies that position themselves well today in the infrastructure, data, security, and software layers of the AI stack stand to create enormous shareholder value. The challenge for investors is that there are thousands of companies trying to position themselves in the AI space. There's a lot of noise. There's a lot of hype. There are companies that are legitimate and companies that are just slapping the word artificial intelligence onto their marketing materials.